Hey guys, hope you are all having a great day. Today we had some pretty big news coming from Citadel Securities themselves as to receiving a huge investment from another giant financial company. We will go over all the details as well as covering some other relevant information. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. Citadel Securities announced today that Sequoia and Paradigm have made a $1.15 billion minority investment in the firm. Sequoia led the round, with the investment coming from Sequoia Heritage, and their partner Alfred Lin will be joining Citadel Securities' board of directors. Citadel serves more than 1,600 clients, including many of the world's largest sovereign wealth funds and central banks. How do we even begin to make sense of this? Honestly, there are multiple ways to view this, with the most obvious being that Citadel Securities needs a serious money infusion in order to keep operating. For those that don't know, the mainstream media apparently displayed Citadel being down a full 39.29% since December of 2019. Being this down, it would make sense the Sequoia would invest, which is serving more as a bailout, in Citadel in order to get them liquidity and funds to keep kicking the can down the road. For those that might have forgotten, this is not the first time Sequoia Capital has been involved with meme stocks. Earlier last year, Sequoia Capital granted Robinhood some investments along other firms to a total of $3.4 billion to keep them afloat and operational. It seems Sequoia is repeating the same tactic this time around for Citadel, with Kenny and friends doing whatever they have to survive yet another day shorting meme stocks. I think this was done to prevent yet another run like January, with perhaps some big dominoes falling that might have caused the entire thing to fall apart and we get our MOASS. A domino big enough will upset the entire order, and could lead to their inevitable collapse, so Sequoia seems to be playing once again the savior of the day, coming to the need of whatever firm needs serious cash infusion to keep the lights on. It seems to me that this cycle has been incredibly hard for Citadel to run, harder than any previous one, and the desperation is reeking from everywhere. Another thing to consider is that this cash infusion could be a first attempt in a chain of actions Citadel may be taking in order to do an initial public offering. I have been hearing a lot of rumors about it, though there is no evidence to support it. Regardless, this cash infusion might be an investment from Sequoia to help Citadel run things afloat and perhaps go public as well. Only time will tell us, but for now, I certainly don't view this current situation as any good. The timing of it, knowing that GameStop is set to announce and officially open their NFT market to the world, seems incredibly sketch, and I think Kenny and friends are scared about the implications of this. They never thought this $3 stock was going to drive in such a massive number of investors willing to buy and hold regardless of what they did to the daily price. It is hard for me to believe that a company would be willing to invest $1.15 billion in Citadel, knowing their extensive losses, and how sketchy and unpopular they are. Today we heard a lot from Jerome Powell. He was asked about the measures the Fed is taking to uphold their ethics rules, and was also met with some tough questions aimed to measure if he is fit to continue being chair at the Fed. Let's actually begin with that. Jerome Powell told lawmakers that the economy is apparently healing at a rapid pace, and that because of it, the economy might no longer need as much help from the central bank in keeping inflation in check, including raising interest rates. Powell talked about how he is confronting a complicated scenario as he is likely to win another 4-year term as head of the world's most powerful central bank. The way he explained the situation is, the economy is growing swiftly, even if it doesn't appear so, but it has been stumped on by repeated waves of variance during this pandemic, as well as a surge in inflation which has proven to be a lot stronger and lasting than economists initially expected. He made mention that workers are finding jobs and that they are also seeing high wage increases, but due to rising costs in housing, gas, food and other goods, consumer confidence has tanked. As we have mentioned many times, the Fed's job is to maintain price stability, and they signaled that they could raise interest rates to cool the economy and prevent rapid price increases from becoming permanent. Powell reiterated this commitment today, which signals in a way what he will do if re-elected, which by all accounts seems like he will remain chair at the Fed. Powell said, and I quote, "If we see inflation persisting at high levels longer than expected, if we have to raise interest rates more over time, we will." Powell made 2 goals in his testimony, which suggest keeping price under control will be critical for achieving a sustainable labor market. High inflation is a severe threat to achieve maximum employment, so if rapid prices start to become entrenched, the Fed will react starkly to choke off runaway inflation and risk touching off a recession. All in all, Powell reiterated all the basic points, showed little to no accountability in any of his policies that have directly led us to where we are, instead opting to blame inflation and high prices as if they are all products of the making of the economy and not his direct actions. The man could not be any more unfit for the job, which pretty much guarantees to me he will be picked to serve an extra 4 years, since this is the way we roll in public office. Lastly, Powell talked about ethics today. He announced that the Fed is close to finalizing a broad revamp of its ethics rules, prompted by the heavy criticism it experienced due to officials' financial transactions during the pandemic. Powell announced new investment restriction in October after reports that 2 regional Fed bank presidents had been actively trading in markets while helping set the nation's monetary policy. The new ethics code guidelines effectively end any ability to actively trade. It will prohibit Fed officials and senior staff from buying individual company stocks and limit their trading to broad-based investment vehicles such as mutual funds. They will also require trades to be pre-approved by the Fed and pre-scheduled, removing the potential for any appearance that officials were benefiting from inside information to bolster their personal finances. I am not going to lie, I think the measures the Fed is taking towards this are very appropriate. I really like this new set of rules, as they are fair, balanced and should keep officials walking the straight line with a little concept that seems to be forgotten in modern-day politics: integrity. What I want and long for is for lawmakers to step up the punishments and penalties that officials and public servants should face upon breaking the rules. I am sick and tired of the little fines they get. Let's now talk about today. The Fed submitted over $1.527 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 54% of the total volume today, while dark pool trades for GameStop accounted for 48% of the total volume today. AMC had a larger amount of buy orders than its sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bullishly, gaining under 1% for the day. It opened to a short bump that took it from 22.65 to 22.95. It then experienced a pullback that took it all the way down to 22.16. Upon market opening, AMC ran to 23.75 before shorters took it down a notch. It found a good spot to bounce at 22.65, which was very bullish to me. AMC started progressing, running and reaching past 23.20 before shorters took it down again with attacks, dragging it all the way down to 22.20. During the last couple of minutes of trading, AMC ran a bit again, closing at 22.79, below the VWAP. As for what to expect tomorrow, AMC will find support at 22.40, 21.25 and 20.80. Resistance will be met at 22.80, 23.35 and 24. AMC has traded within the margins that we anticipated on Sunday's video. Tomorrow, depending on the results of how our economy has been performing, we could potentially see it break support and retest $20 or actually run up, breaking resistance and consolidate higher. So far, AMC has traded just as predicted and I am super happy about it. GameStop traded bearishly, losing under 1% for the day. It opened to a small run from 127 to 136. After reaching this high, GameStop retraced back down to 130 where it remained for a bit. Note that it kept attempting to break above the VWAP, but was unable to fully consolidate above it, so it kept falling down. After a while, GameStop broke support again, this time falling down to 128.40. After a little bounce above 130, GameStop retested the bottom at 128 before jumping up and closing at 130.30, below the VWAP. As for what to expect tomorrow, GameStop will find support at 128, 124 and 120. Resistance will be met at 136, 140 and 143. GameStop has also been trading just as predicted, well within the parameters discussed. Same as AMC, depending on the report of inflation we will see tomorrow and how the overall markets react, GameStop could easily break that 120 support if it's a bearish report, and we could fall well below 115 if it's really bad. If it is as expected or even better, we could see the markets get a bit bullish and perhaps rally, driving momentum upwards. I have officially started working on the Discord, which should be out within a couple of days. Remember, This will be the only place where I will provide alerts and signals for entry and exit positions for scalp day trades, and I hope to see you guys there once it is released. And that is all I have for you guys today. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip into the moon.